just listening to the panelists that have spoken so far, we sort of got the lay of the land in terms of monetary policy and what the dynamics are at play there. We've talked a little bit about, the banking system in terms of some of the strategic decisions that are facing banks here, and putting that in a global context. Thinking about sort of what is to come in the panel, we're going to talk a little bit about some of the fintech dynamics. And earlier this morning, we heard a lot about the macro outlook across Europe. We talked about a little bit some of the geopolitical dynamics at play, and we talked also about some of the stresses we're seeing in financial markets. I want to try and tie a lot of those elements together, and I'm going to talk a little bit about our outlook for the Cypriot banks. But I think some of those strands that I've just mentioned are going to be very important to put things into context. And I'll sort of just start with the clear message that we have a very positive view of the banking system here and the banks. It's reflected in the trajectory of our ratings and the current outlooks that we have. But that's a very reductionist way of looking at things when you just say there's a positive outlook on the banking system and on the banks, because essentially you've got a series of competing forces at play. And it's going to touch upon some of these elements that the other panels have spoken about and what we heard about earlier this morning. You've got sort of a series of tailwinds that are helping and supporting the banks and the banking systems. And then you've got a series of headwinds that are going to make it increasingly difficult. So what are those tailwinds that are helping, the positives? What are the headwinds that are negatives? Well, it's been spoken about by some of the panels and earlier this morning. And I think one of the biggest tailwinds that we're seeing is you've had this massive cleanup of balance sheets of the Cypriot banks. And I won't mention the numbers in detail because they've already been cited by others. But you're looking at non-performing exposures around 50%, which is gigantic if we put this in a sort of historical context, going back to, I guess that was the end of in 14, 15, when you had the peak, and it's come down to, if you remove what is guaranteed by the authorities here, you're looking at sort of single-digit non-performing exposures. So you've got this massive reduction over time. It's still relatively high, that legacy number, relative to other European banking systems, but you've had this massive cleanup that's taken place, and that's taken place in a way that's been done using market forces, and we haven't seen the government support to the same extent in terms of that cleanup as we've seen in Greece. So I think it's a major sort of tailwind in terms of having those cleaned up balance sheets. Now, you've also got a growth story, and again, this has been touched upon by various other speakers today. When we think about the growth dynamics here in Cyprus relative to European peers and in the global context, you've got quite a strong story. We're forecasting, we revised downwards as others have our forecast for the Eurozone. You've got quite anemic growth, just above zero for next year. Here, the forecast is to decelerate slightly from the strong numbers we're expecting this year, but still to be around the 2% mark, which, if we again put this into a broader context, is relatively supportive. Now, some of the other dynamics that are pushing the banking system that are supportive, and we've just had a long discussion on rate dynamics, inflation, and essentially for the Cypriot banks, where you've seen quite significant compression of net interest margins over time, and the compression here has been more pronounced than we saw elsewhere in Europe. Rates going up are very beneficial for the banks. They've got a significant amount of liquidity that's being parked at the ECB. They're getting a lift there. Their deposit bases are quite strong, so they're not under pressure or as much pressure to pass things on immediately. So they've got some pricing power there. So there's a positive dynamic happening there. And the other sort of force that I wanted to talk about is digitalization. Because you've got the Cypriot banks have a profitability challenge. You've got high structural costs. This cleanup has not been an easy one, going back to what I said before on the balance sheet de-risking. But we have seen, and because of the pandemic, it's been accelerated. You've seen a significant uptake in the use of digital platforms to transact. And the banks have jumped on that. We've seen significant investments, and they're starting to bear fruit. There's been, a streamlining of physical branch networks across the island. All these things are supporting and will support profitability and operational efficiency. That being said, as I sort of shift to what are some of the headwinds, well, I think that getting that cost base down and profitability is a significant headwind for the Cypriot banks, because there are significant challenges that are out there. Likewise, going back to what I talked about, asset risk, you've had this massive cleanup, but you've still got significant leverage in the economy. You've still got a lot of the non-performing exposures. Whilst they may be off the bank's balance sheets, they're still being worked on, and they're still going to drag to a certain extent on growth and on the ability of banks to lend. So getting those volumes that are really needed to push up profitability. And then you've also got, thinking about that, you've got the interest rate story, and we just sort of heard the dynamics there at play. As rates come up, it's going to impact borrowers' capacity to pay. So you've got that, which is also going to have an influence on asset quality. So you've got these sort of competing dynamics, and overlaid on all of that is you've got a very positive story here in terms of the debt trajectory of the sovereign, in terms of the fiscal dynamics of the sovereign, and that's been reflected in a certain trajectory of the ratings. But you've got a very challenging, broader context for the markets right now. Whether that be looking at the debt capital markets, whether that be looking at the equity markets, really sort of any significant market right now. There's a lot of stress out there, and there's a lot of uncertainty. So all of this sort of, the reaping the benefits of this cleanup, it happens in a time where things are going well for the domestic economy here, but there's a lot of clouds around, whether those be geopolitical, financial, economic, that can influence that positive trajectory and sort of lower it a little bit. So again, I just wanted to sort of put that in perspective. We've got a positive view of the Cypriot banks and the Cypriot banking system, but you really need to sort of understand the story being those sort of competing positive forces and negative forces. Thank you.